You're watching Notepad. I'm your host Ibrahim Sani. Last week was an interesting week for the equities market, where day on day and day after day volumes were recorded and breaking each and every record every single day. This signals that the equities market is actually reaching new heights. People are actually investing, or in a way speculating, the market quite extensively. We've had a lot of analysts coming over to talk about why the situation is as such. If you've missed any part of those interviews, just watch our past interviews to understand a bit better about those situations. But right now we have a very interesting guest, because we are taking it straight from a player in the market. Joining me is the CEO and ED, or Executive Director, and also Head of Listed Derivatives of Kenanga Futures, Azila Abdul Aziz. Azila, of course, we've been speaking about derivatives for a bit. We've spoken to you about derivatives the last time you were here. I still want to talk to you again about this. But let's do a quick check into how Kenanga has been performing very, very recently. We've seen, I was in fact the MC of that event. Kenanga bagged 7 awards. Congratulations on that. What made Kenanga a little bit more interesting than most for last year? And will things be a little bit different this year?
Okay. Thank you, Ibrahim Sani, for having me again at Astro AWANI. So, interesting. Thank you that you mentioned about the awards that Kenanga won recently. So I would say it's a commendable win for the Kenanga Group in general, because it shows the commitment and the journey that we have been undertaking, being present with the business, engaging our customers and delivering the financial services within the capital market. And if you note also that being the listed derivatives business, we are also 100% owned by the Kenanga Investment Bank. We bagged 2 awards from there. And one of the awards, we actually, I'll humbly say it to you, that we won it for almost 17 consecutive years.
Oh wow, really? I didn't know that.
So
okay.
that's on the
What's
equity,
that award again?
The equity and financial derivatives.
Oh, okay.
So
congratulations yet again.
thank you
The
very
streak
much.
has not yet been broken.
Thank you very much.
Yeah, some of your competitors are actually watching this, and they must be...
well, it is going to be like an endorsement to the industry, I would imagine that, not just specific for Kenanga. So generally, I think we are humbled by that. We are happy that we had that recognition, but the journey is still there. What we did good is that I believe that we stayed true to our listed derivatives business. We stayed true to that. And what are the things that we do within our capacity? Can we just make it as simple as ABC? We continue in our journey to actually diversify our revenue base. We pushed, grow and build more on the inbound business, where we encourage global money, global flows, global clients coming into Malaysia, trading derivatives. Inbound business, B, to actually educate more mainstream domestic clients, be it retail, be it corporations, be it institutions, to understand derivatives and use derivatives as a product to hedge price discovery, as well as is one of the way to optimize transaction costs. And thirdly, we are not forgetting our network. We continue to groom our network for that, and in that aspect, we empower them with the knowledge of futures for them to be selling futures. So all this will not be possible without embracing digitalization. So we already did that pre-COVID time. We are already embracing that. And today, we're about 70-30. Online, offline kind of access into our markets.
I'm so surprised there's still offline access.
There is still, because there are still high touch involvement. For example, some of the commercial clients prefer to have conversations with brokers, and also still dependent on broker to have that execution done. So I'll stop right there first. Maybe,
It's nice that you mentioned that, because what Bursa recently did in terms of the Bursa Excellence Award 2019, the 7 awards that you guys won, one of them is a new award called High Touch Award, and was won by Macquarie, which is also interesting because it does recognize some players that are excellent in terms of high touch. And in this sense, Macquarie won it last year. Things will be a little bit different for this year, which brings me to my next question. You guys are facing unprecedented times, and I'm sure you've probably heard this a lot of times. It's very tiring now, actually, to say it, but say it we must. Things are different for this year. How are you coping in running your business for this year, and how is it very starkly different from how you ran the business last year?
Okay. The word that we're looking for, we need to pivot very quickly in a virtual environment. Okay, can I start with that?
Yeah.
Now, I'll just cover a bit on both sides then, since you asked about the business. From the sell side of things, we are the brokers, so we offer services, right? So the moment when we were already given a directive given the strict MCO that took place in March, and where we had to split our operations into 3, I'm sure you will be facing the same in your establishment as well.
Yeah.
We had the DRC side, we had working from home, and of course we were part of the essential services, which means that we can operate, but we cannot operate as how we used to be.
Yeah,
all right. So the first thing we saw was loss of human touch. Right, and how do we fill up the gap? So most of the time, our operations are mostly running on a tactical basis, rather. Yeah, on a day-to-day operations, as you can relate it to the world as well. Only one exchange, which is, I think if I'm not mistaken, it's Philippines exchange that did a shutdown for a couple of days. The rest are all BAU. So can you imagine that? So we have to make sure that the financial services clients remain, the online clients are able to continuously trading, and the offline or the high touch, is how you put it just now, would be able to access their broker. So that's one aspect. So lots of new things, but very much tactical. So we empowered a lot of our people to get on with more hands-on experience in doing so. They learn new things, at the same time able to troubleshoot and pivot very quickly, as I mentioned just now. So all in a virtual kind of environment. And then from the sell side, from the buy side, which is from the client perspective, what I've been hearing is that I mentioned to you about the 70-30. So the 70 is still online, offline. The online continues to trade even more actively because they are familiar, and it's like, for example, Kenanga Futures, we offer KDF Trade Active. That is our go-to listed derivatives platform. So client can continue to trade in any parts of the world. Yeah, and for those who are already accessing from outside the country into Malaysia, inbound business, they are BAU as usual. So we ensure that is
Would you say that account
properly.
opening was rising in the past few months?
Yes, I would say that during the pandemic time, there were
By
quite
the
a
way,
fair
we're
bit
still
of
in the pandemic,
requests.
but maybe during MCO.
During MCO, yes, there were. I would say yes. However, the only thing that we could have done better, now can we just say that, is that without a doubt we had that digital kind of technology on the front end, but we would like to improve further when it comes to, when it comes to the entire business. There's front end, there's middle, and there's back end. So most of the time, if you see, businesses are very robust when it comes to front end.
Yes.
Digital marketing, giving you the
Because
gadget,
that's
giving
the
you the
interfacing
platform.
element of your customers.
Exactly. But there are other things that you should look at, but this term STP, straight to processing, it has to be seamless. So one machine must talk to another machine, and that experience matters. So we are looking to do that. And coming back to your question, yes, there were a lot of requests. It's only natural because during this time, everything is still locked down. People go towards digital. And I see people happily trading because they have a platform.
Yeah.
And then the next question they ask, okay, where do I get that kind of information? All right, because I have a view on crude oil. You saw what happened to crude oil as well, very wild, right? I had a view on crude oil. How do I express it? I have a gadget here. I can start trading it. Of course, it's provided by the brokers, but I need to get this information much more candid because we trade on headline news that time.
Of course.
Yeah. So
Another element here is that CDS account openings for most of your competitors are also on the rise. That's why the trend, I'm just trying to see whether or not CDS account opening is rising, and therefore futures account trading is also rising. It seems like people are very interested. When I say people, it's retail investors, right?
okay.
And trading volume on the Bursa has again reached another record high at closing bell on Thursday. 16.69 billion shares traded, 8.56 billion done. These kind of record trading numbers does push forward the agenda of, are people really excited about equities and derivatives and futures, or is this the only method left for them, particularly during times of pandemic, because they were busying themselves with investments in other asset classes?
Yep.
But those are no longer, optimal. Now they're moving towards this. What do you think is the story there?
Maybe I'll give you some color on derivatives because it's also part of the the offerings in the capital market as well.
Yeah.
Now we'll go back to your first statement just now on with CDS and CDS account opening was on the rise. So I believe for futures we don't need that CDS account.
Yeah.
So it's totally it's like onboarding. So I believe CDS would be a way because equities went wild, right? I think it
Still is.
It is
Still going wild.
But let me tell you this, check this out. If you think stocks is wild, imagine futures is like stocks
On steroids.
on, I don't want to say that, since you say it, it's on turbocharged.
Turbocharged.
Turbocharged, okay? Can you imagine that, yeah? So if you look at it, okay, which product would you be very familiar? We saw, okay, let's put it this way. We saw a massive sell-off across all asset classes.
I agree.
Equities, fixed income, currencies, commodities.
Yes.
Do you think we wish that we had currency futures in this country as
Yeah.
well, so that we could have a bit of
We
action,
can
but
have
not at this point in
SC to
time.
have a conversation on that.
Okay,
It'll
so
be
so
shy
with that
lately.
sell-off, and for the very first time in history, we saw negative oil pricing. So if I quote to you, on future side, we were having a field day, I would say,
Yeah.
but volatility is wild. Volatility begets volatility both directions. So,
So
can
it's
you
just a
imagine that?
downward spiral in a
Both
way.
directions.
Yeah.
So you could have a market which was like that and then goes up over the sudden and then come down again. So to give you one particular example, the time when crude oil was negative, people were also panicking. It gives you a downward spiral across other commodities. People start talking about palm oil. Would it face the same fate? And then when that happens, one exchange, if I could quote, CME, which operates
Of
the
course,
contract,
Chicago,
they were very, very fast. They pivot very quickly, informing customers, would there be a new methodology of settlement, given that the underlying has gone, or the futures prices has gone negative. So these are the challenge that we face during such a unprecedented scenario.
But
so one area that I would like to quote among all this volatility or craziness, I could put it that way, FIA, Futures Industry Association, which is based in Washington, D.C., it reported that in the first half of 2020, futures and options market grew by 32% to a new record high of 21.9 billion contracts.
Oh my God. Yeah.
Equity indices,
Yeah.
interest rates, as you can see, US is facing that. Currencies, energy. Okay, you want to take a wild guess? Which of these products gave you the positive or triple digit growth?
I don't know. Energy. I don't know.
Take a wild guess.
I don't know.
It just hit 2,000 ringgit, $2,000.
Gold.
Yeah, gold and silver. So can you imagine that? There's a lot
It
of.
hit upper limit. Some of the gold companies that were trading publicly hit upper limit yesterday.
You did?
Late last week.
I think taking cue of that. I think the analysts are all
Tom
looking
May,
at
yeah, that name came
Okay.
about, yeah,
Right.
and a few others, but yeah.
Having said that, I wish that the Malaysian contract on gold could have actually had their field day also. I wish,
But
because
some investors revel in this kind of market uncertainty and market excitement. It is really exciting, to be frank, lah. But when you're investing with your own cash,
Okay.
right, you want to look for stability, less volatility, range
Okay.
that is far narrower than you would normally enjoy. That kind of stable outlook, particularly during an uncertain time like
Okay.
right now. Would derivatives be an answer for that kind of conversation?
that would be where people would put money with. Okay, for example, when there's that volatile condition, let me quote one product now. I'm sure you're familiar with palm oil, crude palm oil futures. Yeah, prior to all this pandemic, economic kind of concern, all these challenges that we are seeing in the first half of the year, volatility was around 15%. Okay, so pretty much 80, 100 ringgit range per day. Yeah.
Okay.
Given that scenario, everything went spiraling down, and I mentioned to you, volatility peaked at more than 40%. So can you imagine a 300 ringgit range in a day? That's really making
you can't.
brokers on their
Yeah,
toes
you
on a
can't-
single
you
day.
can't do anything on
But
that.
what do we do? I mean, clients know if they trade in derivatives, they know they can get that price certainty. For example, the certainty that we are looking at, in a sense that, let me use it very loosely, certainty in a way that today the price of crude palm oil on the active month trades X, for example. But given that kind of swing that you see in the market, you have a very steady curve of 3 years, and you can actually see, that's what the beauty of futures is, you can actually know the indicative price of the 3 year forward, 1 year forward, 2 year forward. So if you are a producer, you would be able to sort of like hedge, and at the same time you know that what would be the indicative prices, whether it's a contango market or a backwardation market. Same goes to crude oil. You have a very solid 5 year curve. So coming back to that, futures is agile, it's easily deployed because you can enter either short or long, expressing your views, and at the same time, it gives you that certainty especially when you're hedging.
Okay.
Right? Okay.
Yeah. We'll take a short break before
Sure.
we continue our conversation with Azila of Kenanga. Don't go anywhere. Thanks for staying on with us. We are with Azila of Kenanga. We're talking about currently, before we're going to break, we're talking about derivatives. It's, I have to say this because while people are very interested with equities in Malaysia, people are not aware maybe of the robustness and the stable nature of derivatives. Why do you think it has taken such a long time for this habit to be created, and it's still not there yet? There are only certain number of investors investing in futures as opposed to, say, for instance, equities.
Okay. I would say that people are afraid. I guess the first thing when they hear about derivatives, they are beginning to be afraid of the word and not understanding the product. We had this conversation 2 years ago.
Yeah.
And I think the landscape, I would say that there's been a lot of changes. Without a doubt, we don't see wide range of spectrum of product coming to the market, but the existing products actually continued to grow strength by strength, okay? But we are also, like for us, in a company like Kenanga Futures, we also offer clients who are already savvy on futures to trade outside the country.
Yeah, of course.
Yeah, so you have the world is your oyster, put it that way. There are other robust exchanges. And do you know that futures started from the 1800s?
Oh, I didn't know
the
that.
modern futures.
No
Let's talk a little bit of history.
No
okay?
way, I thought it's like a new thing.
It's not. From the 1800s, modern futures contracts, yeah, which helps farmers, commercials hedge their exposure. Fast forward today, you see the development of many robust exchanges, CME Mercantile Exchange, Bursa Malaysia Derivatives, our very own, that operates the most liquid and active futures contract. And of course, they had the state of the art in terms of their system, trading, and so forth.
There's also something in the works right now about Bursa Futures, I think CI, Composite Index or something like that. They're building something. They've yet to receive approval, but they're also trying to make this a little bit more interesting for the derivatives business.
I believe as an exchange, the most important thing that they will be looking forward is to actually roll as many active contracts as possible.
Yeah.
Now, for example, in Malaysia, we still feel that there is a need with a movement in interest rate. You saw we had one record low now, 1.75. Yeah. So there have been a fair bit of movement there. So I think we need to actually revive back the contract. Like Clibor used to be very active in the 80s and in the 90s right now. So with all those changes, that should be there. That's under the category of interest rate futures, and then we need to revive back our government bonds futures. So that's for Malaysia. But then if you look at the rest of the world, we normally benchmark ourselves higher.
Of course.
We'll see how the
best
doing.
does it.
Yeah, exactly. There's so many currency pairs, and you can see all those indices that has been rolled out overseas are the ones which are active, the ones which are people using to actually hedge exposure, and not only hedging, but sometimes you would need it also to express your view. For example, if you think that gold is going to punch any higher, what do?
Well, it's going to punch out.
You're just going to go long on it, right? So either that you go long and okay, that's speculation here. In my world, I call it directional trading.
Directional trading.
Directional
Past
trading.
performance do not reflect future performance.
Indeed.
But I don't know. I like drawing a straight line, so it's going up.
Yeah.
But yes.
So how do you express that? How do you express that? And you want to have a piece of action. How do you do that? Right? None other than, okay, you're familiar with ETF, you can go through ETF. But ETF is, I wouldn't say but, let me take that back. ETF is another financial instrument. It looks exactly, it settles exactly like stocks.
Yes.
Right? It settles at T+2. It also gives you a quick exposure. If you believe in this particular indices and you think that there's growth within this countries, then you start buying the ETF. Right? So you put it, in my world I call it WAGR. Okay, not bad. And then, but there's another instrument here, which is futures, which costs you a fraction of it, a fraction of the total value, and that gives you that leverage. Yeah.
Right.
So if you need to express your view on a certain asset, And that's where you
I mean,
start trading futures.
if there's a lot of pull in derivatives, why are people still, why can't we read these kind of statements? Or the record high in terms of
awareness again. But I think now it could be better because of pre-COVID scenario, it actually makes us learn a lot of things. Digital, like I said, we have to pivot very quickly in a virtual world. We are using more gadgets. For example, even in our business, we continue to check that box when it comes to millennials who are interested to learn more about or increasing their financial literacy. So that's where we push more of online trading. Yeah, and of course at that point in time also they need to understand what they are involved in, because futures, for example, if you are involved trading on CME crude oil, right? It's a totally different animal, totally different volatility. That kind of swing gives you an edge, especially if you're an intraday trader, and the leverage will give you magnified kind of returns or profits. But if you get caught on the other side of the equation, it may mean brutal losses. So these are the things that we made aware when we inform, we educate our clients. But generally, it is a very liquid contract. Any futures contract is liquid in that sense,
No, that's right. I mean, that's the first thing that I learned in financial management back when I was like first year, second year. It is one of the more liquid contracts.
And optimize in terms of cost.
The thing is, if it needs to be, taken a lot of advantage in terms of educating the market, do you think that you need to band together amongst your competitors as well, because you need to boost this industry even further in terms of market awareness? Is there an opportunity for you to work together with some of your colleagues from other organizations on this?
I believe everybody is working very hard, especially before COVID. I think everyone runs their own agenda in terms of how they go on the education kind of bandwagon. As for Kenanga Futures, we continue, like I said, we continue to stay true to what we do best. We run campaign. In fact, we had, I think we just launched early this week. Our 4th edition listed derivatives or futures trading dedicated campaign. We used to call it Back to the Futures, but we renamed it. Okay, I know you must be thinking about some movie, but we renamed it Into the Future. Okay, the modus operandi, the terms and conditions remains the same. You trade and you get rewarded cash prizes, including some smartphones. As we know, people need smartphones to trade these days. But we inject one new element, and that is we gamify the experience of trading listed derivatives. We inject the element of gamification. That's what I'm trying to say. So you get rewarded on a weekly basis. You get familiar with all the futures contracts in the world. Then you maybe will look at some short quizzes there, and you get rewarded weekly.
So if people want to check this out, is there like a targeted website or whatever?
Yes, there is. Just follow us on social media. We have it on our Facebook, Instagram, and the rest. So we have it. We work it as not only as a subsidiary company, but we also network with our group as well. So we are connected in that sense, so that we have more audience. So check it out. I mean.
Sounds fantastic. I'm going to check it out right after we end this conversation. But final words before we end this conversation. I want to understand a little bit better in terms of the segment that you're going after. It sounds like millennials are part of the target segment that you're going after. In fact, I just found a new generation here, Generation Alpha. I don't know whether you're aware.
I am.
So my kids
it's a different ball game.
So how do you manage that kind of changing landscape between your customers right now? You have the boomers, the Gen X, Gen Y, and then millennials, and then now Generation Alpha, which is going to be your future customers. Talk about futures, right? So how do you manage that whole array of behavioral changes within each segment?
Okay, it starts with the company itself. We are quite diversified in terms of not only gender, but also in terms of their generation gap. We have that. We have, I think right now we do have about 3 generation. The alphas, I'm not sure whether they are back to
They're not graduating yet.
They're not, but I think the youngest hire that I have is about, what, 23 years old. So, okay. So we are managing that. So from the company, from the top, from the management side of things, we actually, I empower all the managers that work alongside to actually start to understand that and try to be in that journey of coaching, leadership, everything all encompassed. We start with that. And from there, we apply back when we actually deal with customers. So it's like a daily kind of thing, and it's like a journey for all of us. It's difficult to understand because when you start having people's behavior, soft skills matters. I'm sure you did cover some Davos stuff in IR 4.0.
My boss.
Yeah, okay. Okay, they had this thing called emotional intelligence, one of the key ingredient or key skill that you need in this world of AI. When intellectual and technical skills are similar, you need to develop that emotional.
But it's good now, right? Because in terms of digital adoption, it has skyrocketed all platforms, all industries.
Indeed. Yeah.
We push people who have never, used the full-fledged. Everybody buys a 5,000 ringgit phone. Nobody knows how to use it, right? To its full capacity. Now, they know because they're forced to.
Yeah.
Does this facilitate greater adoption of digital technology now?
Of course. I mean, we're waiting for the 5G so that we can get connected quicker.
Yeah, definitely. Yeah.
Time to market, latency, and stuff
Put pressure
like that.
somehow on the industry. Yeah, no, I agree. 5G.
Yeah, the 5G should be one of it.
Couldn't have come any earlier, I suppose.
Yeah. But one thing that I discovered also during this time is that with digital, other than the one that I just said earlier, it actually helped to eliminate some unconscious bias that has happened. Yeah, because everybody's pivoting on virtual kind of conversation, and imagine people who are out there who are looking for jobs and so forth. Sometimes, I mean, unconscious bias every day. You see that every day, experience every day. With digital, people seem to look at things on a level playing field. I don't know. I mean, that's what I observe. So we're still we still need to see that, and of course, the main thing that we want to see coming back to what we aspire this year, and hopefully we get out of this scenario. And we are still, we are still going to stay true to our business. We would like to, I mean, what we coin all the while is that we aspire to build a smart listed derivatives trading community in Malaysia to boost up e-learning. Yeah. People understand. If you don't understand the product, there's no way you can trade the product.
You should be very optimistic about what the market holds, and for the market, for the consumers out there.
We have to be positive. I mean, yes, you can see they express their intention on stock markets. Why do you think they do that? Because they wanted to have return, looking for that alphas. Can I just say that, right? So that is one way.
It's such a
So we don't know how long it's going to be.
Yes.
But while there is liquidity, we're out there.
Fantastic. It's been such a pleasure talking to you, Azila. It's such a really interesting conversation to be had. I remember having this animated conversation the last time you were here as well. That was the CEO and ED of Kenanga Futures. He's also the head of listed derivatives there. If you've missed any part of this interview, just go on to astroawani.com, look for Notepad. Plenty of interviews like this can be found there. And you can also watch these kind of interviews on your mobile devices. Just download the Astro AWANI app wherever you get the application. Until then, thanks very much for watching, and goodbye.